Morning all, how are we doing? Morning, everybody. Morning, Bellino, Kennedy, Virginia, John, Adrian, Danny, David, Baggy, Martin, Amy. How are we all doing? So I'm a bit late this morning again. Always a bit late in the mornings. Just watching this New Zealand dollar, or watching this pound New Zealand more like. Pound's getting a bit hammered this morning. Not quite sure what's going on with this pound. This strength came out of nowhere yesterday for no apparent reason, but it all seems to be undoing itself today. So we'll see what happens there, but some decent movement on the pound. Morning, John. Decent movement on the yen as well. So the yen intervention talk that we looked at yesterday seems to have kicked in. We've got ADRs across the board on yen pairs. So some decent movement on the yen. To the downside, strength coming through. So glad I got out of the longs on that one. But we'll have a look at all those in a minute. Morning, Keith. Right, so quick recap of yesterday. Not a lot, nothing banked yesterday, actually. It was a flat day. I think it was 0.01% profit or something. So where's my pen gone? The H1 hedging set file. We're 27% up on the month. Banked 0.85 yesterday, 1.5 banked today, 16% drawdown. The euro US dollar is up at 2.8% drawdown. So that's getting a little bit extended. It is just longs only on that. Aussie dollar, US dollar has got 4 positions on at 2.28. Apart from that, nothing else of any concern at all in there. So euro, US dollar and Aussie dollar, US dollar. So it's US dollar movement that's causing the issue at the minute. But very nice profit so far on the month. Obviously, it's the last day of the month today. Morning, David. Didn't expect Englishman to show up to the tea party late. Well, you know, I don't drink tea, I drink coffee. 0.77 banked yesterday, negative drawdown control, 8.58. This is the H4 set file. H4's been struggling a bit this month, only 10% banked. When I say only 10% banked, it's banked 10%. 1.3% done in drawdown control today. Pound New Zealand was the main issue. However, that is rolling over fast and hard now. So that may well completely unravel today. This could well be down at like a couple of percent later with a big profit banked. So we'll see how we end the month. H1, M5 mean reversion, flat yesterday, 1% drawdown control done today, 20% on the month, 8% drawdown. Pound New Zealand, again, the only real issue there. Not a major issue, 1.7. ADR reversals, 7% drawdown. Flat yesterday, 0.33. Negative drawdown today. And it's a couple of bits approaching 2%. Again, Pound New Zealand. God, it's got some yens on long, look. So it's going to go into drawdown if that yen squeezes, but ADR reversals. So nothing banked yesterday. Flat day. Bit boring. Morning, Stevie. So a few ADRs to look at. We've got 4 minutes to the open. Let's quickly cover the news. So today we had CPI. Very weird reaction this morning to this. Remember I said yesterday, if we get 6.4, 6.5, 6.6 or something, we should have a really nice run on the Aussie dollar because it means they're going to increase interest rate. Governor Lowe came out and said, we're going to increase the interest rates because inflation's not quite under control. All bullish. So it's very weird. Every reaction we're getting to positive interest rate change at the moment seems to be the market isn't happy about it. So they seem to be overpricing everything quite dramatically. So big plus there for the Aussies. If we look at quickly what the Aussies, what the Aussies have done. We had a massive whipsaw, a little bit bearish after the whipsaw. Massive whipsaw, not gone anywhere. Massive well, that one's obviously down because of the Australian dollar. The yen. Aussie dollar, New Zealand dollar coming down. Aussie dollar, US dollar, whipsaw coming down. So the reaction to a positive CPI figure, meaning bigger interest rates, is negative. Again, we've just seen that exact same thing happen with the euro. We've seen exactly the same thing happen with the New Zealand dollar. So the market seems to have no confidence in further interest rate rises or no interest in further interest rate rises, which is interesting. So this is a third on the trot now. News came out obviously after that. Load, and we've got 2 minutes. Maybe tough to know. We invented different. Blah 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 blah. There's a bit more Japanese news, but low inflation expectations are well anchored, but they cannot be taken for granted. I wouldn't call that well anchored, mate. I'd call that you were expecting it to go up by 0.1. You got actually more than that. It's not anchored, is it? That's going the wrong direction. So they, I think, will need to do their more interest rate changes there. So that should be bullish for the Australian dollar. So this may well be just a knee-jerk reaction that we're seeing. Traders pair bets on ECB rate hikes, no longer seeing 50 basis points this year. That's exactly the opposite to what the ECB came out and said yesterday. Screw the traders. I'm going to listen to the ECB. Likely the ECB will hike by 25 basis points more than once. So the traders come out and say, we're not looking at 50%. ECB comes out literally 2 minutes later and says, we're going up by 50%. Listen to the ECB. Don't listen to whoever these traders are. So bullish euro again. Afternoon, today's news, we've got ECB stability review at 9 o'clock. We've got the CPI for Germany coming out at some point, not sure when. We've got GDP for the CAD this afternoon, and we've got JOLTS at 3 o'clock. So there's a lot of movement today. We've also got Jordan speaking later. I always pay attention to Jordan, regardless of what they say, because very rarely we ever hear anything coming out of the SMB. So when we do, worth listening to, because he might give some forward guidance. We might get some decent movement off of the Swiss franc. So there you go. There's your news recap. EA I worked on yesterday afternoon. I've completely recoded it for the opening range breakout pre-market set file. So I'm going to run it on all 4 pairs today. Obviously, you wouldn't normally run it on these 3 because it's the Frankfurt session. You only run it on the DAX, but I'm going to run it on all just so I can test functionality. Buy stop, sell stop, buy stop, sell, good, buy stop, sell limit. Screwed, right? Okay, doesn't work. Start again. What is wrong with this thing? I'm beginning to think there's something wrong with this terminal because there's absolutely nothing on my coding. I coded something yesterday to place buy and sell orders with no other code in it. Did it wrong. So there's something going wrong somewhere along the line, and I'm really struggling to figure out what it is. That did that on the S&P last time. Buy stop up there and a sell limit down there. Something weird going on with this. Really is. And it's the S&P. Every time in the morning, it goes absolutely mental. Give up. Anyway, so we'll see how the DAX gets on. Just want to see how this triggers. That's good. New buys put in. That's good. So that's all working. Buys gone long there. That's good. Not listening to you. You're stupid. Bear with me while I just test this. I just need to get as much testing in as I possibly can on this, just to try and get whatever this bug is fixed. It's driving me up the wall. I really, really, really wish there was a simple way to code this, but there isn't. I think basically what I'm going to do is I'm just going to trade it on 1 pair. It's a conflict somewhere, so I'm just going to trade it on 1 pair per instrument. Great, easiest thing to do. I only want to trade the DAX in the morning anyway. I just want to see if this triggers a short when that stops out down there. I've also got it logging now as well, so I can actually see what's going on with it. Invalid stop loss or TP. Oh, yeah. Okay, so that's flipped short. That's good. 2, 2, 2, 1 on that. Okay. That's still not triggering right. I'm giving up. I can't be asked anymore. I'm going to trade it manually. I can't get the EA to work at all in live trading conditions. I can't break it. It literally works 100% perfect in the strategy tester. However, when you put it on a live chart, it just doesn't work at all. Doesn't do what it's meant to do at all. There's no logging or anything that can give me any clues. So I think I'm just going to give up with it. I'm just going to trade it manually. Doesn't work. There you go, TP hit on the DAX. So the pre-market 5 on the DAX today was short. TP hit. Second TP running at 5-1 is down there. So we'll see if we can get that one. Short. So let's have a quick look at where we're going on the DAX. ADR just hit on Aussie dollar CAD. So this morning, obviously we've broken short. We're coming straight down into a double bottom from last week. So very strong support area coming up here. This is also the monthly support just coming up below it as well. That's an old monthly high, actually. That's 2 months ago high. Yeah, it's 2 month high. So we've got this area here. So this is the 2 month high, this purple line. We've tapped into that multiple times and it acted as a beautiful resistance previously and now support. So this is the coming up for the first kind of reattempt. But this level, this area here has obviously been attempted twice last week and they failed to get through it. We got a gap to the upside as well, quite a substantial one this morning to fill. So it would make sense that we trigger some limits to come back up into there, potentially for another leg down. So the way I see it playing out today is probably a bounce, gap fill, drop if we're going to continue on that move to the downside. So this could well just be a fake move this morning, in which case this should... Oh, no, this won't take any more trades because it's just going to stop out with 2 profits, unfortunately. God, I hate it when things don't go right. Morning, outro. Morning, Dresco. Outro, I'm trying to trade this super 5-minute pre-market breakout, except there is no broker on the planet that allows you to trade it. For some reason, it breaks everything. I can't work out what it is. It's not slippage. I've ruled out slippage. I've no idea. I just really don't know what's going on with it. So I've decided to probably scrap the project because it's just not, just can't get the trades on. It just will not let the trades go on for some reason. And it's not, MT4 doesn't give you any logging, fortunately. So it's got to be something to do with broker execution, why it's not letting these trades get traded. And there's obviously nothing you can do about broker execution apart from switch broker. So the only other thing I can try is to switch it onto another broker, but I've got an ECN connection in less than 20 milliseconds with Forex. I don't think I can get anything faster. So I just don't think the strategy is automatable, unfortunately. It's a pain in the backside because it's a really good strategy, but it's something I can trade manually. So I think I'm just going to trade it manually. I'll use the Price Action Toolkit to trade it. 530 milliseconds, 620 milliseconds, 218 milliseconds. I mean, I don't really think I can get any faster than that. Anywho, I'll manually trade it. It's just not filling them. It just doesn't execute the orders. And there's no logging that tells you why, basically. All this EA is designed, all the coding and the logic in this thing says is, place a pending, long and short, right? Trigger it. If it stops out as a negative, flip long. Literally, press the buy button is the only line of code. If stop is detected as negative figure, press buy. Nah, don't want to do it. Just doesn't do it. Literally just doesn't do it. There's no other code in there. That's it. It's that simple. And it just won't execute for some reason. It's got to be to do with the amount of volume of data that's coming through here. For some reason, it's just not able to execute it on multiple instruments. One instrument, no issues, never. I've tested it on one instrument multiple times. I've tested it on Forex, gold, oil, every index, no problems. Put it on more than one at a time, just cannot handle it. So something bizarrely wrong with it. Anyway, but I can manually trade it, so I'm just going to do that. I can't be bothered with it anymore. I've spent literally 2 weeks of my life trying to get it working. I've given up. Right, so DAX. Inside bar, so there's your 5-minute opening range. So the short, pre-market short was a nice profit, easy 1.5 R. The inside bar at the moment running, got just under a minute left on this. So there's your 5-minute range. So obviously the break of the 5-minute range to the upside would be the gap fill play, which is ADR. So it's a big move potentially on the DAX this morning, all the way up to ADR up there. Once that gap is filled, though, there's potential, obviously, for either this bottom here to hold and an accumulation and then come up and retest those highs if we're going to go long, or a continuation short, which is going to break this low. And if this low breaks, it's a long drop on the DAX. So this is the that previous month's high, which has acted as resistance a couple of times. We finally broke through it, and it was very supportive. So if we break that level, there's nowhere for this to go but down. And we're going to look at last month's low. And then, obviously, that is the target we had initially in place for the gap fill, previous gap fill. So there's plenty of downside potential on this. However, obviously, at the moment, it looks like this wants to go higher. So we are in a bull market. We haven't managed to break this level, though. Yeah, so where we stopped is, can't see, can you? My head's in the way. So where we stopped is that previous resistance. So this could be the start of a new leg down. If you look at the US indices and what's going on with the US indices, they're not happy. Yeah, so the DAX is obviously the one that's holding up. The NASDAQ's happy at the moment. As it should be. We just had Nvidia hitting huge numbers. So, but all the other indices in the US, apart from tech, are struggling at the moment. So if you look at the DAX and the Dow as the main comparable ones, there's no real reason for the DAX to be this bullish. So I think there is a good chance that we get a breakdown. So it looks like a nice looking short opportunity at the moment, but we'll see what happens today. See where we go. So one sec, dog's going mental. Right, just the postman. Right, so that's the DAX. 5-minute, second 5-minute is an inside bar. So see where this breaks. We just watch this for a sec to see if we get a break to the upside. See, this is so frustrating. Should have gone long there. Should be in longs now. Milking it. Very annoying. Don't know why. It just won't trigger. Might try a test on another broker this afternoon. I might just stick it on, I don't know, Darwin. I've got Darwin X accounts. So I might stick it on a Darwin X account and just see if it's a broker-related issue. Because if it works in the strategy tester, in theory, it should work in the broker. But it doesn't. So there's something broker related stopping this. It's not the first time I've had this either. Live execution and back testing is a very different thing with requotes and all that sort of stuff. It doesn't work the same as in a strategy tester when you're testing scalping strategies like this. It's just very different. Whipping post, lob it over to me if you like. I'll test it. Yeah, right. Okay. I've stopped break even short on the DAX. Haven't went long as yet. No, it's not gone long yet. Still inside bar at the minute. This downside breaks today. There's a big drop coming. So it's quite an important level, this. Could you not try getting it to set the pendings 5-10 seconds before the candle close? It's nothing to do with pending. Pendings work fine. Absolutely fine. Pendings are no issue. I don't know what happened with the S&P, but the pendings all trigger fine. It's when it stops out in a negative, and immediately I tell it to immediately flip short. So maybe I should stick a delay on it and say, right, count to 10 and then press the buy button. Obviously, it doesn't like pressing the buy button as soon as it stops out, which is the whole edge of the strategy is if you stop out, you immediately go in the direction of momentum. That's the edge. If you can't execute the edge, there's no edge, is there? So that's what won't execute. It's not pending orders. They're fine. Apart from that one, I don't know what that one was, but again, running it on multiple accounts is the solution because I can't get it to fail if it's running on a single account. So for me, it's easy. I'll just set up 4 accounts and have four accounts running. But that's got to be fixed, that flipping thing. I don't know what that is. Very weird. On the gap fill propulsion indicator, what do you have for your propulsion strength? 0. What's the same as reduce the amount of gaps? So if you want less gaps, you just basically set it to a higher number. So propulsion candle strength is to do with the previous candles. So this candle here, if you set it to 0, what that means is every single propulsion candle that has a gap will be painted. If you set it to a higher number, it will mean that this candle here has to be larger than that preceding candle, one preceding candle. If you set it to 3, it has to be larger than the 3 previous candles. So the idea is it's spotting accumulation breakouts. Yeah. So the breakout has to be bigger than the size of these previous candles. Those are the perfect ones. So if you want to set it up, the bigger the number you put in, the less propulsion candles you're going to see. There you go. So that one is not 1. Yeah. Now that was 1. Now it's not, because that candle is smaller than that candle. Because I've set it to 5, 2, 3, 4, 5. We're looking at all of those candles there to see if that candle is bigger than all of those. It's not. So therefore, that's not a propulsion gap. But to me, that is a lovely accumulation break, which is why I want to see it. That's why I have mine set to 0. So I want to see them all. No, I'm happy to manually, go, right, well, scrap that one. Scrap that one. And I'll probably scrap as well, to be honest, but where have I gone? I disappeared. I'm back. Morning, Gable. With the EA settings, should be opened 2 trades at the beginning because the 1 and 2 range is the same. Pass. Don't know what you mean, Gable. With the E8 settings, E8's a prop firm. Should be opened 2 trades at the opening because the 1 and 2 range is the same. Are you talking about the opening range breakout EA, aren't you? Sorry. Brain's not there. So yeah, if you set this to 2 opening ranges and you set the take range breakout 1 to true and take range breakout 2 to true, then yeah, it will take 2 trades. So yeah, whatever is, I mean, I set it up however you want it to. That takes, these control which breakouts get taken. These control the times the trade, the breakouts are the ranges. So set it up to trade whatever you want. It will take as many trades as you want. And obviously you've got the ability to take multiple trades at the same level if you want to. Up to you. It's completely configurable. So trade it as you like. So 5-minute opening range break is long on the DAX. So we are going for the gap fill. So we'll see what happens when we get to the pre-market highs. If we break through that, there's a very good chance of getting that gap fill done today. So big run up. So watch this level, which is yesterday's low, which is here. That's yesterday's low. And there's your gap, which is ADR today. So you'll probably get a little bit of resistance there as some limit orders trigger at the lows. But likely we'll get back up to there today. So we'll see if this holds. We need this obviously to give some momentum. So we may well be seeing a fairly weak euro Open. Not really anything on the euro at the moment, is there? Bit flat. Okay. Got an ADR hit there on euro US dollar as well. God, that's a big move for the euro US dollar overnight. We'll have a look at these in a minute. Yes, I understand the EA, but doesn't open 2 trades. Don't know. Morning, Steve. Missed the ORB V2 stuff. It all went completely wrong again, so I've given up. I can't be bothered with it anymore. There's some error in it. Well, I don't think there's an error in the EA because I've tested the EA to death. There's no error in the EA. If I stick the EA in the strategy tester, and test it, it doesn't do anything wrong. It works absolutely perfect, absolute execution to the tick. No problem. Live testing, all over the place. So there's something to do. There's something different in the live market conditions that is stopping it. Yeah. So 2 trades taken, TP's hit, stops hit, executed at the right time, stops cancelled perfectly. Yeah. TP hit, trailing stop kicking in. There you go. So trailing stop on that. Triggered, flipped, triggered, flipped, TP hit, 100%. Exactly what it should do. Yeah, in here. So it cannot go wrong. Literally, it just makes money. Put it on a live chart, it just doesn't trade. I have no idea why. I've never experienced this with an EA. It's frustrating the crap out of me, so I can't be bothered. It's driving me up the wall. I'd much rather just manually trade this. In fact, there's a Feudal Crest 2-for-1 offer on at the moment. So I might actually do that, just manually trade this because it's a fantastic strategy. Now look at that. That's exactly the type of scenario that I want for testing. Complete Christmas trees at the open. So I can test that it goes long, short, long, short, long, short, long, short, long, TP, thank you. Brilliant. Yeah, you can't fault it. See what I mean? This is what's driving me mental. I cannot break it. When I put it into the strategy tester, it just executes flawlessly on everything. I've tried it in different instruments. I've tried it on everything. You stick it on a chart and it goes, nope, not interested. Screw you then. Can't be bothered. We've got better things to do, like making money. Do you have a different broker to test it on? I've tested it on Robo Forex. I've tested it on my Forex funds. I've tested it on tick data. I've tested it on non-tick data. No problems. So yeah, I'm going to test it on Darwinex this morning. The problem I have with this, obviously, is because it's an opening range breakout strategy. I can test it when it's any time. So I could say, right, take this candle and trigger the orders off this candle. The difference is there isn't any volume here. I think what the problem is there is so much volume. The tick volume, as you know, on the open, the reason we trade this is because of volume. Yeah, the whole strategy relies on volume. Yeah. So the reason this works is because the volume goes like that. Yeah, I think this is the problem. I think there's too much volume here for broker execution. So if it is that, then yeah, it's going to mean that you're going to need to have a broker with, I mean, I've got I've got 200 millisecond execution, but they're just not triggering the orders for some reason. But the problem is MT4 doesn't report why. Doesn't log that. So I don't really know how to sort of fix this, but it's a bizarre one. But yeah, I'm going to try another broker. I'm going to try Darwinex today. Also, I need to test single instrument It seems to work okay on single instrument, but then again, I've had instances where it hasn't worked on single instrument. So it's got to be an execution thing. But all I can do is test the logic of the EA. So I put it in the strategy tester, and the strategy tester is told to run through the logic, execute the code, and just execute it as if there was 2-tick spread. No slippage. If you experience slippage, I can simulate slippage as well. So I can simulate slippage in the tick data. Yeah, I've done that. I've simulated slippage up to 5, and it's executed flawlessly. Yeah, so I'm simulating everything that the broker can throw at me. Yeah, in a live chart, it just doesn't work. There's only so much time I can be bothered to put into something where, and I know it makes money. I've back tested it. I'd much rather spend my time trading it than trying to build something that just doesn't want to work. So, anywho, which YouTube live contains the ORB V2 strategy? There is no live. It's just the 5-minute pre-market. So it's on the website. Strategies, the opening range breakout strategy. There's a video there about it. All the version 2 strategy is literally taking the 5 minutes before the open, yeah, and going long or short on it in the same way. Except if you stop out, you just flip short. That's all it is. It's literally that simple. There's nothing. This is why it works. It's not a complicated strategy. If momentum's going long, you press the buy button. If momentum's going short, you press the short button. If you get stopped out in one direction, you just go the other way. Because an open like this has to break. When it breaks, you go with it. That's it. You just literally make money when the break happens. It's very, very simple. But you've got to stop when you make money, basically. FC 2-for-1 offer, there's an option to increase your leverage as well. It's there. I'm not really worried about leverage. It's not the leverage that's the problem with Feudal Crest. It's the fact that they seem to have an awful lot of rules. DAX rejected the pre-market open. Chart. Yeah, so we are looking like it's going to get through there. Big rejection to the downside, so should be breaking long, I think. Try asking ChatGPT why it doesn't work. Yeah. Well, I don't think ChatGPT is going to be able to answer that one because there's nothing wrong with the code. I've proven that. Code's absolutely fine. It's just not executing the orders. So the thing you have to understand with the code is literally a line of text, right? And all the EA does is it runs through each line and executes it. And that's what the backtest is for, to run through the code and backtest it, make sure it works. It does, flawlessly. Nothing wrong with it. So, yeah. Anyway, could you set up a retry if it's not opened an order? Yeah, it does. It's all built in, Kennelly. So the logic I've got in there is place the pending orders, right? Trigger the pending orders. If you get stopped out in profit, thank you. Don't trade anymore. Done. You've made me money. Happy with that. If you get stopped out in a loss, immediately flip short. Next tick. If there is less than one order open, short it. Next tick. If you've asked for 2 trades and there's less than 2 trades open, short it. So literally every single tick, it's looking at the code and going, have I got 2 orders open? Have I got 1 order open? Yes, no. If I haven't, place one. That's the logic. This is what I mean. It's physically impossible for this not to be trading right now because the logic says if I've just closed a trade with a loss, get me in again. Not doing it. Something is stopping this from working on a live account. If it works in the strategy tester on tick data and on multiple broker data, the only thing left is the broker. So again, it's testing brokers. I've got to test a different broker. But anyway, enough of that. Let's look at some charts. So we've got a lot of ADRs to look at today. Pound New Zealand, we'll have a look at that because that is, oh no, Pound New Zealand isn't a hit. Pound odd is. morning. So pound New Zealand, obviously, we've just started to roll over. We've very nearly got a reversal alert there. Look, on the hourly, just missed it by a tick, basically, by the looks of things. So obviously this is screaming up at the moment. Hopefully we're going to get some strength coming through on this New Zealand dollar. I was expecting the strength to come through. As soon as I opened my laptop this morning, I went straight to the news and I was like, yes, bullish Aussie. That means bullish New Zealand. Open up the charts. What? It's gone down. So yeah, confusion reigns at the moment with these Australian pairs. But yeah, should hopefully start to get some strength coming through in these. But we'll have a look through all of these. So all of these ADRs you've got today, the vast majority of them are Australian-based and yen-based. That's where we've had all the movement overnight, obviously. So Aussie dollar CAD, ADR hit to the downside. So this is your news spike. So these ADRs that you've got today on these Aussies, they are ADRs technically. Obviously, the distance from that high down to there is 100 ADR. This is a news whipsaw, though. So if you look at the actual movement, excluding news today, that's really what you've got there. So just be careful with any ADR hits you get, because you might get signaled into ADRs long and short, where actually it's just off the back of this spike. So if you look at the 5-minute chart and actually see what happens with this news, the news basically was one candle. Is this one here? Yeah, so they rallied up, cleared out everything above, rallied down, cleared out everything below, returned to origin, business as usual. Yeah, so it's just a double-ended stop hunt. Typical news move. So all we did off the news basically was clear the decks on anybody that was really short and had moved any stops down. And now we've just broken out the downside. So if this is going to be Australian strength, and in theory, from a fundamental perspective, it should be, because we've just had inflation rise, which means interest rates need to go up. If you look at the fundamentals on it and where we are with the Australian dollar, we're sitting on 3.85 off of a 0.25% increase after having a pause before that, remember. They're way behind the curve with interest rates compared to most of the rest of the world. And their inflation isn't going in the right direction. So this is now open for a good 0.25% to 0.5% increase. New Zealand dollar is sitting up at probably what looks like it's going to be its terminal rate. So there's no reason why we should be seeing some weakness in this Australian dollar. It's good news for the currency. It's bad news for people in Australia, because obviously inflation going up means everything gets more expensive, but it's good news for the currency. So we should be seeing a rally in this. So Aussie CAD to the downside, don't see any reason why that shouldn't be a good ADR long. Just about to get a reversal on that in a minute. That'll be your first one. Not extended on the hourly. Aussie dollar yen, opposite on this one. So all this talk we've had about the yen, basically most of this yen stuff that we have had over the last sort of couple of days, with them saying we're not happy with the FX rates, we're not going to intervene, but we will intervene, sort of thing. It seems to have spooked the market into, okay, we definitely need to be a little bit more bullish on the yen. So we've got moves down across the board on these yens. So any of these ADRs, up to you if you want to take them. Obviously, ADRs are a scalp move. So after a big, strong push, if something is going to do that, that's what you're taking your profit on. So there's still potential to take them long. However, with the yen interventions, if it does happen, they can last for days, sometimes weeks. So with these yens, you may get into squeezes long. So be careful if you're a bit risk averse. Might not be the best sort of trades to take these ADR reversals. But the EA, I'm letting the EA just carry on as normal and take them, just because the EA's set up on here. Just take every trade so we can see every trade and see how every trade plays out. So obviously it's got quite a bit of yen exposure on short at the moment. Obviously because it's taking ADR reversals against the yen. So yeah, like that one as a potential long opportunity, nicely broken down. We've got further targets to the downside. We've got weekly supports coming up as well. So there's lots of potential bounce points to the downside. However, if they are going to intervene and this is going to be continuation of yen strength, we could see multiple days down. So just be a bit careful with them. Let's quickly cover the rest of the yens because they're all pretty much the same. Swiss yen, as you can see. So this is where we had that news of the intervention coming in. They were like, oh, and then they pushed back up again. They're like, yeah, we definitely want to be a little bit stronger on the yen. And then this morning, obviously, they've piled into it further as well. So Swiss yen, again, ADR reversal. You've got a low coming up there as well. You've got a monthly high coming up there, which you might get a reaction from. So again, wait for the reversal alert on these and just scalp a little bit out. Look at recent areas of previous support, which may turn into resistance as targets, and obviously propulsion gaps to the upside. So that's the Swiss yen. Euro yen, pretty much the same as the Swiss yen. So that's come down. ADR 125 almost hit there. Again, big, strong drop. And the other one was the New Zealand yen. So that one's a big hit to the downside. Got along on that on H1 as well. So this is also an H1 RSI extension long. So this is the one that I took. So this was taken the other day there. I exited that one manually, basically just because I don't think we should really have too much yen exposure on. EA's got back into it again today. That's an ADR and an RSI extension. There is every potential, obviously, for this to continue down. So just be careful. But we've got a nice little quick scalp play to the upside potentially as well. So again, up to you on these. Just be careful of all yens because there is a good chance it's going to push. Steve, any benefit in creating an ORB V2 indicator? No, I don't think so. I mean, it's not. You don't really need an indicator, do you? It's one candle, just a breakout of a candle. So it's very easy to trade with the Price Action Toolkit, which I think is probably the best way to do it because at least then you've got control. You can just trade it manually. So I might try trading that manually. I might try trading it manually this afternoon. I'll let these run this afternoon anyway and let them and see if they can figure their lives out. It's good to keep testing it. I just think, it's gathering data as to why things are not happening. Yeah, there's nothing in the code. I've stripped the code back, literally. All the complicated bits of code I had to put safeguards in, I've taken it all out. So it's basically, if you haven't got an order on, do this. If you haven't got an order on, do this. It's just, it doesn't get any simpler. I can't simplify the code anymore. So I'd like to gather more data on it just for my peace of mind to see what is causing it. So if I can get it to auto trade on all three of these this afternoon, we know there's nothing wrong with the code, because if it didn't work this morning and it does work this afternoon and the code is identical, we know it's another factor. The only other factor is broker. And like I said, I've had this before with brokers' accounts. And this is a demo as well, which is a bit weird because I've had this on live accounts where brokers don't fill orders. You get requotes, and then you can see obviously the requotes because they all show up in the logs. But the fact that this literally is just not doing something, there's something else going on. But on a demo account, you would expect not to have any kind of broker shenanigans as such. But I don't know. But an indicator is not really going to need. You don't need an indicator, do you? Literally, you're sitting there. As soon as that next 5-minute candle opens with the Price Action Toolkit, the way to do it with the Price Action Toolkit is very simple. So all you're going to do is sit here. Let's say that this is the candle, the 5-minute candle. As soon as the next candle opens, it's literally buy stop last, sell stop last. Done. That's it. And then if you get stopped out, as soon as you get stopped out, you just go sell at market, buy at market. It's so easy to trade with the Price Action Toolkit. And I know that the orders are going to get executed because all this is doing is simulating pressing the button that appears in the top left-hand corner. So, except it's automatically calculating stop levels, lot sizing, trailing, does everything else that you want to do, which 74 doesn't allow you to do. So I just think it's easy to do that. So because I love the strategies we've been watching this strategy playing out for weeks and weeks and weeks and weeks and months in here now with the opening range breakout. We've been watching these pre-markets flying. So we know they work, and I've back tested the data, and the data is profitable as hell. So it's just if the EA is not going to execute for some reason, do it myself. Too much money to be made to be mucking about for hours trying to figure something out that's not broken. Anyway, morning, Brian. Mister, if we talked about pound New Zealand, no, we haven't covered that yet. So we've just done the New Zealand dollars. The yens. So again, just be a little careful with all of these yens. Nice big propulsion gap on New Zealand dollar yen and support level there. So trading back up into there potentially for another leg down. But we'll see what happens at the US Open. The US potentially, we've got the potential today for a drop, accumulation, and then a New York to drop it further, because obviously they will want their bite of the yen cherry as well. So we might find we get a further push down this afternoon. So just be a little careful. The other ADRs we've got today are Aussie dollar, US dollar. So just scaled out of one long on that one. Still pushing down. So the Australian dollar really, really weak at the minute off of the back of that news. Actually, no, it's not that weak, is it? It's weak against the Canadian and the US. So it looks like we've got US dollar strength at the moment. So a little bit of US dollar strength coming through, driving this Aussie down. So the Aussie's obviously not got any strength off the back of its news. So if we look at that as being neutral to weak, and obviously we've got a strong US dollar, that's driven that down into ADR. So Aussie dollar, US dollar from a fundamental perspective is a short. So that is the biggest short at the moment, the minus 11. Yeah, so COT is fully short Aussie US. All the fundamentals are pointing to the downside. We've got retail longing it, which means you want to be short. So it's all a massive short at the moment on this one. So again, it's a nice ADR reversal. It's not quite extended on the hourly. So if you want to take the ADR reversal, obviously just wait for some kind of strength to come through, get a reversal alert in there so you see that you've got the buyers on side, and then take a scalp out of that. But already got a couple of positions on this one, Aussie US, from the H1M5 strategy. So first entry there, second entry there on this way down. We've left these two beautiful propulsion gaps in. So rejected that 3 times, driven back down, and now we've broken out of last week's low. So big, strong push potentially, and then pull back, which is where we can get out. But at the moment, it's come down so hard and so fast. They're very well spaced out, these entries. I don't think there's a third going to go on there. Let's have a look. 27, 50, I need my calculator. 54 times 75%. So 40 pips is 3/4 of an ADR. That's going to be, yeah. So any reversal alert that happens there is going to trigger a third entry on this. So third entry, average will come back down. So it looks good. It's obviously already extended on the hourly from last week. Is that last Wednesday? So that's Aussie US. Euro US dollar, again, come down very, very strong. That's rejected off of yesterday's low and ADR already. So you've probably just had a reverse. No reverse alert on that yet because it was a big, strong push down. So there's your reverse alert. ADR tapped perfectly into yesterday's low. Dotted line there. So rejecting. So looking for a push back up on this one. Again, should be strong euro moving forward. Not at the moment though, as you can see. It's been very, very weak. So again, this is one, same as the new Aussie dollar, same as the New Zealand dollar. We've had positive news on interest rates and inflation, yet it's just coming down. There's something weird going on. The market's shifted, and it's not really paying much attention to the interest rates at the moment and the inflation figures. So either this is just a false move, and it's quite a big false move. If you look at it, isn't it? And they are going to now spend the next 3 to 4 weeks rallying back up to those levels, which is potentially on the cards, or market's broke. So interest rate rises now is nothing to do with what powers up the currency. Go figure. Unlikely. So I still like it as a long. There's no entries on it at the moment from H1, M5. All the entries have played out profitably, which were there. Not extended there at the moment, but we are extended on ADR. So there is a reversal alert opportunity there. And it should be a long. So, and pound odd is the other one on ADR. So hits the upside. It's not really a hit, is it, actually, looking at it? That's not an ADR pound odd. This is what I was saying about the news. That's caused the ADR alert, basically. But if you look at it from where we started, we had that big old wick down that the broker mucking about there. That's really the movement of the day. So if you look at actual movement of the day, excluding that stupid broker candle as well, you've only actually done 63 pips on a 111. So I'd kind of get rid of that one. Right, so there's your ADRs. RSIs, there's lots of things to look at on the RSI as well. So most of the hourlies, as you can see, are all yen-based at the moment. So we've got a couple of Swissies in there as well. So if you look at the hourly RSI extensions, starting off at the top, we've got the Aussie dollar yen. That's extended to the downside. So big, strong push. We're almost down at the 25 area. Nice rejection wicks at the downside there as well. So this morning we're down at ADR. We've got nice rejection. However, obviously, if this is going to be the start of a yen intervention, we could see a big, strong push. There's two things that can play out if they are going to intervene. So what we tend to see when there is an intervention is there's one on here. Is a big, strong move. Again, it's probably the best thing to look at. So what we see is a day like this. So ADR on this is 120. That candle there is 561. Yeah, so bear in mind 120 is ADR. That move there is 580. That move there across, obviously, 2 days is 800 pips. Yep, so that's an intervention. So that's the type of move that we tend to see when we get a yen intervention. It's basically 300 ADR is quite conceivable. So just bear that in mind. The other thing that we get is if the market gets spooked and thinks we don't want to be shorting the yen, we just get normal price action where we get yen strength. And in that case, we tend to get normal price action. So it pushes down, pulls up, pushes down, pulls up, normal market structure. So if that's going to happen, there's no problem taking longs. So if you look at the Aussie dollar yen on the hourly, yeah, if we're going to get normal market structure, we should get pullbacks. So we will see that kind of movement happening. And that is absolutely fine to take it. Yeah, so if it's going to push down for a while and it pushes down in an orderly fashion, there's no problem taking mean reversion trades, obviously, because that's what we're doing. We're reverting to the mean. That's where we're taking our profit. So when the market is extended, it's pushed very hard. We're waiting for that profit take move from the banks to jump on board and make the money with them. So these ones that are extended on the yens, there's absolutely nothing wrong with taking them if there's no intervention. If there is an intervention, you're going to get stuck in these and you're going to be in them for a bit potentially. So just got to bear that in mind. And again, the 2 exposure rule, if you're position trading, don't get overexposed. If you get overexposed and get into 7 positions long on the yen and the yen collapses by 300 ADR and then drops for 2 days, your account's blown. Literally, that's it. You can't do it. You're going to be so exposed. So just make sure that you're not getting into too much exposure on them if you are. But these are all pretty good mean reversions. So we had a lovely big drop, an accumulation, ignore the spike. Second leg down. Potentially we might get a third leg down before we get a pullback. The pullback will be somewhere between 38 to 61%. And that's where you're going to be out. So they're looking good. Not quite extended enough on that one yet for me, though. CAD yen, it's an ADR reversal, obviously. CAD yen, you can see that's now 2 days pushing back. We are starting to rally back up. There's your propulsion gap target to the upside. And again, if this pushes down, move your target back to there. And if it does more propulsion gaps, yeah, just target the propulsion gaps. We know they're going to get hit at some point, or at least if that doesn't get hit, that one will. If that doesn't get hit, that one will. That's the beauty of propulsion. You never know which one it's going to get back to or how long it's going to take, but you know they're coming back. So good target to the upside on that one. Just extended. Your 5-minute reversal alert on that one, if you were taking the 70s, was already triggered this morning. So you've got a nice W starting there. But we'll see. Again, we may get another leg on this in New York. So just bear that in mind as well today with the CAD yen, with all the yens. Swiss yen extended. So we got an ADR hit on that one. Got a nice support level coming up. That one's ready to get into. So M5, next reversal alert, will be going long on that one as well. So that's an ADR and an hourly RSI. So good opportunity for a first entry on that one. Support-wise, we've got the 3-week high, which is at 175 ADR. US dollar Swiss has just hit as well. US dollar is really strong today. And a bit of a weak Swiss franc. So we've got this little bit of a low here. We've got this old monthly level, which is a bit of a weird one on the CAD yen, Swiss yen, because it's just before that peak. But we've got this weekly, 3-weekly high at 175 ADR, which has been respected a couple of times. Then we broke through it. We haven't tested it yet. So likely we're going to get limit triggers there. So if you jump in here and you don't get out on that pullback, you're probably going to get a bounce there. And obviously by the time we do that, we'll be extended all the way down here somewhere. You know, we don't often get there before we get a pullback. It does happen, but unusual. So good opportunity. Obviously, just wait for some signs of strength. There isn't any at the moment on it. So get in when you do get some signs of strength. Euro pound and euro yen. So euro pound, we just had the 5-minute reversal alert in long, as you can see. Hourly RSI extension is just there. So this was this is an extension from yesterday. Look, that was the entry yesterday that I got into there. Just tapped into support today from yesterday's low. So potentially this is looking like a multi-day W reversal. Propulsion targets, loads of propulsion targets, loads upside. So pound strong, euro should be strong. So continuing basically in its range bound form as it has been for ages. Yeah. So we are sideways. So we got these range lows down here, which again are around about 200, 250 ADR. So if we do get down to these areas, we'll get some bounce from there. So accumulation, it's either going to just muck about like this as it has done, you know, this sort of movement continuously, which it should do with them both being strong pairs, or it's going to drop a little bit more. And if it does drop a little bit more, obviously, there's not really any support until you're getting down to those old areas back there. So it's got potential to drop quite hard, but that's going to need a really strong pound and a really weak continued weakness on the euro. And there's no reason why it should be. So, yeah, so euro pound and euro yen, obviously that's extended on the hourly as well, as you would expect. So this has come off of last week's low beautifully. Look. Yep, so straight into last week's low, immediate limit order triggers, pushing it straight back up again. But like I say, quite possibly that's the sort of movement we're going to get. If it's just going to strengthen, it's going to be the opposite basically to what we saw there. I mean, this is more of accumulation pushes really than pullbacks. But so yeah, good opportunity there. I think 5 minutes already triggered. Oh, not quite. Just about to. So you're just about to get the reversal on that one. Bit of a messy one, but that's off of 125 ADR. But again, just be careful. I get the feeling we're going to get another leg on the New York session potentially on these. So. George, hope everyone is doing well. Cool. World King top, all smoked. all smoked. Smoke them if you got them. Is that a sign of a good thing or a bad thing? All smoked as in you've blown all your accounts. Could mean two things, that one. Pound Swiss, that's extended to the downside. Sorry, to the upside on the pound Swiss. Just coming up into the weekly resistance, which is also an old level there. So again, we're right up at resistance at the moment. So we've been stuck in a range on this for pretty much 3 weeks now. We are approaching top of range again. So this is very much similar to the euro pound in the fact that it's just the other way around, the pound Swiss, whereas the euro is the Swiss franc, basically. So nice big propulsion gap target to the downside there. This rally yesterday on the pound came out of nowhere. So we should see, I mean, if you look at all these other rallies we've had on the pound, yeah, big push to the downside, pushed up, big push to the downside, pushed up, push down, push up. Down is next. So yeah, no reason why we shouldn't be looking for shorts on this one. If this does break and hold up here and it leaves this in place, then obviously you've got 3 propulsion gap targets and then double monthly high. So be prepared if you get into this as a short and it doesn't trigger and it doesn't work, then you're going to need to just scale in up to there and then wait for it to come back down. So that could take weeks. Yeah. So whenever you're looking at these and forecasting, right, if it doesn't work here, what am I going to do? Where's it going to go? Well, it's obviously going to go and test that area up there, or it's going to get pushed back down from these propulsion gaps. Look at how long it's taken here to go nowhere. And look at how long sort of this move here took. Yeah. And then extrapolate. That's an entire week's worth of movement. It's going to be a week up to there. It's going to week that back down to there, isn't it? So, you know, make sure you're telling your brain, I'm going to be in this for 2 weeks. If I take this trade now and as a short and it doesn't work, I'm going to be in it for 2 weeks potentially. Okay? Sort of preempt your brain into not wanting to suddenly get out of this quick. If it's a position that doesn't go right, i.e. it's going to be a breakout accumulation and move like that, make sure you know you're going to be in it for a while. Unemployment rate, 5.6 on a forecast, 5.6 for Germany. Oh, that's not CPI, sorry. That's unemployment figures. Let's just see if that's moved the DAX. The DAX is just trundling away off to the gap. Watch yesterday's low, as I said, as a initial bounce point. But we're going to get there. Probably going to do that. Gap fill, aren't we? Right. So that was the pound Swiss, and New Zealand dollar yen is the other one, which is extended to the downside. We've already looked at this because it's an ADR hit today, extended on the hourly as well. So this was the entry that I got into there. Closed that one out. We just went sideways. Opportunity for a long. When you get a breakout, obviously, there's a lot of force needed to get through that breakout. So you tend to run out of sellers very quick, and that's why you get the bounce back, retest, and then drop. So there's a good chance that this one will play out today, but it'd be nice if it played out before the New York Open. So 5-minute reversal alert on this. Already triggered. There's your W pattern. So it'd be nice if we can get back up into there this morning if London can push against the yen, or we get some New Zealand dollar strength. And then if New York do want to put another leg in on the yen, obviously they can do that this afternoon. But we'll see. So there's your hourlies. All done. Mark, a bit late today. Have you done oil? I haven't done oil yet. No. How was my flight? No Greg Secker flying trader. No, my flight was good. Yeah. I didn't do any Greg Secker because I wasn't allowed to take my phone on the plane. But there you go. And it wasn't that type of plane. It was a 32-year-old Piper Warrior. It wasn't a Greg Secker Learjet. So it would have looked a bit funny if I'd have been doing a promo video in front of a 32-year-old type plane, which is much more fun than a Learjet. Right, 4 hours. Let's quickly cover these. Euro New Zealand, whiz through these because we've covered a lot of these already on hourlies. Oh, no, we haven't actually. Pound Swiss and New Zealand dollar yen. No, so no, they're not all covered on hourlies. Might have covered some of these on ADRs. So Euro New Zealand, 4-hour RSI extension. So we got extended and embedded. As you can see, there's trades on this already. There's 3 positions on this from the hourly strategy. Big extensions. It's just New Zealand dollar. What more can you say? It's the New Zealand dollar. We have had no strength come through on this New Zealand. It's just reacted massively negatively to positive interest rate change and hasn't done anything since. It's a mystery, this one. But we are just coming up into a potential area of resistance, which is here. So this area here is resistive and supportive, and that's exactly where we've bounced right now. It is looking like it's wanting to push higher again, though. So Euro is along, obviously, at the minute, or should be along. But then again, New Zealand shouldn't be this short. So it's a tricky one to really see where it's going. But there's nothing we can do about it. If you're in it, you're in it. So just waiting for a pullback, which we haven't had. I get the feeling, looking at it, this level today, if this fails and we get a push up into propulsion here, either that is going to be your first kick down, or more likely we're going to retest the monthly high. So there's potential for this to be a good another week or so up to there, and then the pullback will start from the monthly high. So not great at the minute, really. Nothing much you can do about it, though. So it's extended and embedded. We got extended, embedded, dropped down, and we've extended again. So just waiting for the profit take. Yeah, so it's going to pull back at some point to the 24. Just waiting to see whether or not it pulls back now, or whether we're going to run to the high before the pullback. Either way, you get out when you get out. So you either have to take a little bit more drawdown control along the way, or it's just going to play out in the next a few days. Should play out this week, really, if it's going to. But we need that strength, and that's what I was hoping and anticipating today on a positive Aussie news, which is what we got. I was expecting a positive New Zealand move. We didn't get any of it. We got a whipsaw. We got a negative move on the Aussie, which again is just counter fundamentals. US dollar Swiss, we've got an ADR extension, RSI extension, and pound Swiss. So US dollar Swiss, pound Swiss, we already had one, so that's now extended even further. The hourly, so that's now ready for a short. A big move, lovely target down there. Look. And US dollar Swiss is now extended as well. Big strong move. So that's an ADR as well. Nice looking short opportunity. So pound odd. Looking at the 4 hours. Again, big push to the upside on this one. Very similar to the pound New Zealand, except pound New Zealand is a little bit more stretched. So there was an entry there which was closed in profit. That was an hourly entry. 4 hourly entry was also there. So you'd have been out on the 4 hour as well. But that's now broken out of that monthly high. So when you get an area like this, which is tested, you either get a rejection off of it, or often you will get a breakout and rejection, or you get the breakout, accumulation, retest, and off it goes. So we'll see what happens. But it's obviously very, very bullish at the moment, the pound. Against the Australian pairs, we're getting lovely 24 bounces constantly on this. So strong trend is 24 bounce. Weaker trend is 72. So somewhere in the 24-72 zone is where you tend to drop down into at some point. So we're looking for some kind of pullback on this, but at the moment it's rallying like crazy. So same as the pound New Zealand. But yeah, opportunities to get in short. So drop down M5, M15, wait for the reverse alert. You've had a reverse alert on that this morning. M15, you've also had it. Hourly, your entry is going to be there, back down into propulsion, which is down to 150 ADR. So that one's extended. Pound Swiss is also extended on the 4 hour. Again, same thing. Mental pound move yesterday. We got this high coming up, double top, which we're going to test. Probably going to get some limits trigger there. Whether or not it's enough to drive it back down on a profit take or not, we will see. but extension. So nice entry on that one. Again, drop down M15, M5, whichever one you want to take. At the moment, it's just rallying. So obviously, until it breaks down, no entry. Pound New Zealand. So Pound New Zealand, there's 3 positions on this one on the hourly strategy. Third one there. Pushing like crazy. Propulsion gap. So you look at this one, Pound New Zealand, and then look at the Euro New Zealand. Yeah, it's what I mean. It's virtually the same thing. You get the same movement on the Euro and the Pound against the Australasian pairs most of the time. So again, same thing, looking for that break. But we've got this now monthly resistance, which we tapped into, limits triggered, little pullback, we accumulated at that area and then rallied straight out. So that is basically where I would look for initial support. That at the moment is break even. However, we are an awful long way away from that 24. We don't really get that extended away from the 24 that often. So if you look at how far away we are at the moment, we're sitting at sort of 530 pips on a 175 ADR away from that moving average. You don't get that far away from the moving average often. So there's another instance there. We got 430, big collapse back down into it. There, 370 odd. There, 400 odd. Here, 540. So we are really, really extended. You can see it on the RSI. Yeah, we got above the 80 level. We don't get above the 80 level. It's very rare that you get above the 80 level. There's the opposite happening there. And look what happened. Pull back to the 24. That's 100% what I'm expecting, is a pullback to the 24. So just playing the waiting game at the moment. We've got no New Zealand dollar strength coming through, however. It's just not able to rally at all. The pound is obviously strong. We've got 0.75 to 1% interest rate rises coming over the next few months. Well, say few months, 6 months. So it should continue to rally. So we're waiting for some kind of weakness in the pound for them to stop buying the pound, basically, based on these. So they will buy into the pound, then they will wait. As they're waiting, the New Zealand dollar will be able to take control. To do that, it needs a bit of strength. So we're just waiting for some kind of bullish movement, ideally some news to trigger it. Again, as I said, today I was hoping it was going to be today that we were going to get some Aussie strength, which we didn't. We've got the Aussie rates next Tuesday, and then we've got GDP for the Aussie as well. So again, those potentially could rally the New Zealand dollar too. So we've got news next week that might move it. So if we don't get any movement back straight down over the next 2 to 3 days, we may have to wait until next week on the pound New Zealand. But now you can do New Zealand dollar CAD. Extended to the downside, obviously. New Zealand again, Canadian dollar, US dollar rallying like crazy at the moment. New Zealand dollar, no legs, therefore dropping. Just taking another position on this one on H1. So there's another entry literally gone in today on that. So we had a reversal alert there. Yeah, so that was the entry. We are holding the low at the moment. Just about. So we dropped down this morning, rallied off, came back down, double bottomed. That's where you got your reversal alert. So there's your W pattern. Tried to rally back up, got stuck in accumulation, pushed back down, but limit orders seem to be triggering at the moment. So if this triple bottom holds, we're likely to get a little bit of a rally off of it. We're going to need that Canadian dollar to calm down a bit. We'll have a look at oil in a minute as well. Big moves on oil yesterday, very big moves on oil yesterday. So we'll look at that. But impact on the Canadian dollar is a lot by oil. Oil collapsed yesterday. So that's weakness in the Canadian dollar. So the fact that this has come down hard, the New Zealand dollar CAD, against the Canadian dollar just means that there's a lot of weakness in this New Zealand at the minute, because it's certainly not Canadian dollar strength, is it? So, well, it shouldn't be anyway, but it is a little bit at the minute. New Zealand dollar CAD, so that's very nicely extended on the 4 hour. We've been embedded since the 24th of May, since the move, basically. So this is the interest rate increase in the New Zealand dollar, the bullish move, where it's just not managed to get any traction. So I don't think this is a trend shift. Maybe, but again, look how far away we are from the 24. 189 pips on an ADR of 76. Really, really extended. Again, there, look. 170. Look what happened after. Yep, so this is where we are now. That's where we went next. Yeah, so we're just waiting for some strength, but it's just nothing at the moment. Market's just not interested. So waiting game. New Zealand yen we've looked at on the hourlies, and New Zealand dollar, US dollar. Again, 4-hour RSI extension on this one. 3 positions on. Had to do some scaling out on this as well, this New Zealand. So again, big, strong push down. We've not got an ADR on this one as yet. So we're coming down to ADR. There's no real support on this. Where we are now, actually, if you look at this, where we are now, this low here, that was a really nice support, which they managed to get through, retested it, came back up, retested it, pushed through it, retested it. That's where we are now. So there is potential for some kind of rest at this level, which obviously means we'll push back up again. But massive extension on the RSI again, that sort of movement. Not often you get extended down below this level without a pullback. So it needs to be a fundamental shift, and I just can't see it in the New Zealand dollar. I don't get this reaction to positive interest rates. But I didn't get the positive interest rate reaction to the euro as well. Doesn't make sense. So either something's gone wrong with the fundamentals of the way that currencies work, or the market is really squeezing. And if the market is squeezing, obviously that's fine. The market can squeeze as long as it likes, but it will unsqueeze. It's got to take profit on this move. When it does, we're out. So just a waiting game at the moment on these. The strength of this movement, however, though, I would expect the snapback to be very, very aggressive as well. So we should see a big, strong move. Any negative US dollar news is going to rally this potentially. So just waiting on all of these at the moment, just a bit squeezy. US dollar Swiss in H1, wait for M5 reversal for a short. Yep, so that's an ADR hit at the moment. So drop down to M5. It's accumulating at the minute up there. So there's your entry on the reversal alert. That's your last down candle before the high was made. So that's your entry. Very extended on the 5-minute, look, but let me look at 5-minute RSIs. So yeah, above the 70 at the minute, not quite above the 75. So we're up here looking for the profit take on the move. So yeah, just waiting. US dollar Swiss. So let's look at oil. So oil yesterday, when we looked at this in the live room yesterday, I was looking for some kind of support at this level to hold, to mean that we had this low, high, lower high, higher high, sorry, higher low, higher high, higher low. So we were looking for a higher low. Sorry, it's this level, wasn't it? Start again. Not that one, this one. So this was the level I was looking to hold, to keep that market structure alive. It's not. It's just broken it. So this is either a beautiful double bottom, or we are bearish. Can't really see it. Let me just scale out a little bit more. We are bearish. Yep. So we're looking for this low to get tested, stroke broken, which is ADR today. So, you know, this is just not got the legs, is it? The market is constantly saying it's a long, it's a long, it's a long. It's been saying it's a long all year. They've been calling for over $100 a barrel all year. It's just not able to get there at all. It's not even able to break structure to the upside properly. Yeah. So when you look at it, obviously it's an obvious downtrend. But, and you know, this is the confusing thing about all markets. you've got experts in all markets that tell you something is likely to happen. Yet there is nothing on this planet that will make it do what an expert says. All of the big institutions, Goldman Sachs and the likes, their analysts are calling $95 a barrel this year to what was 107 adjusted forecast. So they were thinking there, they adjusted their forecast down to here. They called that back here somewhere. And we were like, oh, okay, looks good. And then it collapsed. We were like, all right, this has got to be the low. We rallied back up again. We were expecting that because what we got was this big gap. And what we've had is nothing but more downside momentum. So, you know, as much as you want this to be long based on what the analysts are saying, we all want things to happen, but it's not happening, is it? So I'm not trading oil because it's proving itself to be erratic as gold is, and I don't trade gold because it's too erratic. So as you can see, not really paying any attention to market structure. So if it's not going to pay attention to market structure, flip a coin, basically. Not something I would position trade, but support resistance bounces, it does tend to react very well at support resistance levels. So I would give it that. And if that is the case, this area here and this area here is what you should be looking at for a potential buy back up into there. But equally, it could come back down and test this monthly low, couldn't it? 2 months ago. So we were expecting this by summer to be, you know, cracked up way above that level. Nowhere near. So don't know where that one is going. Gold at the moment obviously is breaking down as well, based on this US dollar strength. A little bit of a pullback yesterday on it, but seems to be looking like a good short. So we have, though, just rejected this level. So this monthly level here, these kind of lows is where we are sitting at the minute, down there. So this could well be the start of a pushback up. That's going to require US dollar weakness. And at the moment, we don't seem to be getting that. Again, there's an awful lot of confusion out there with the US dollar, and no one really knows which way the US dollar is going, because we don't know what's happening with this debt problem. It seems that they've fixed it, but they haven't. What they've done is pushed it back. So it's still a problem. It's just a problem now they've got to worry about a little bit later than now. So I can't see the US dollar holding out much longer, but it just seems to be grabbing and holding on and not dropping, does it? So I don't think there's any real advantage on any currency still at the moment. Everything is too rocky. So really you should be able to trade everything in all directions. But that's the real spanner in the works at the moment, oil, for the Canadian dollar. So unless this thing actually does start to rally, we're going to see weakness in the CAD. US has got a lot of oil export as well, obviously. So as this comes down, it hurts their economy. Hurting their economy hurts their currency. So you know, there's lots of downward pointers coming for all these US and Canadian pairs, all the US and the Canadian, against everything else. So we will see. But stuck at the minute. A lot of stuff just stuck in little squeezes. Duresco, just smash the like. Good man. Keep smashing it. Morning, Neo. I asked yesterday, but too late. You said you always aim for half an ADR profit, but often talk about the 1 hour propulsion gaps. How do you choose? Well, if the EA is trading for me, the EA picks half an ADR. Half an ADR. That's it. If you're trading manually, there's no right or wrong. You can't choose, basically. It's down to you, Henry. So on oil now, if you're going to long it, and you take the next 5-minute reversal alert, which is going to be in a minute, just about to trigger there, right? So half an ADR and this is 12. There. Right, so you can get out there with half an ADR of profit, which is that level there, roughly, right? If you go out to the hourly chart, that level is in that propulsion gap. But you might want to go for that propulsion gap or that propulsion gap, or you might even want to target that high. Entirely up to you. I just like half an ADR because it's easy to automate with the EA. The EA can be told very easily just to get me out half an ADR. You can't automate targeting a propulsion. And obviously, you could automate targeting a propulsion gap. It's an EA that I'm investigating at the moment, basically building something to do with propulsion gaps. But the problem with propulsion gaps is we know they get filled. You can see all these grey on the screen is all filled propulsion gaps, but they also get left behind. So you have to pick the closest one, and the closest one you will find most of the time is within one ADR. We know that the market spends 58% of its time within its average daily range. So if you target half an ADR, you get out quick, and that's why I like half an ADR. If the nearest propulsion gap target is 1.5 ADR away, it might take 3 days to get there. I know that pretty much every day the market's going to move roughly half to 3/4 of an ADR at least, because that's what it does the vast majority of the time. So that's why I target half an ADR. I want to be out and I want to be regularly banking profit. I don't want to be getting runners. I'm not interested in glory. I'm interested in making money. So, you know, that entry there, there's your propulsion gap. Yeah. So what this could do now is do that and fly for the next 3 weeks. Yeah. If you were targeting this propulsion gap being filled as your target, unlucky, you're sitting in drawdown for 3 weeks. However, if you had taken the M5 reversal alert on this yesterday, and as I did, targeted half an ADR, you're out. Look at that. I was in yesterday morning. I was out yesterday afternoon. What did we do? Bounced off the propulsion gap. Why? Because that's what the market does. We know the market bounces out of propulsion. Yeah? Look. Propulsion. Bounce, 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 bounce. Why? Because that's where they're selling it. So why should it go above there? If that's where everybody's selling it, that's likely where they're going to sell it again. This is where it accumulated for 2 days, and then they bought the crap out of it. Why did it bounce there? Because they're buying the crap out of it. So what do you think it might do here? Bounce. So why would you target that being filled when there's a high probability it's also going to bounce there? Everything in this industry is 50-50 probabilities. It's going to go up or it's going to go down. There is nothing on the planet that can tell you whether that is going to act as a bounce point or whether it's going to get filled. One of those things is going to happen. Happens over and over again. This one here acted as a bounce point. This one here acted as a bounce point 3 times. Yeah. If you were targeting this propulsion gap here to be filled as your target, you got it after 1, 2, 3, 4, 5, 6, 7, 8 days. However, if you'd have been targeting half an ADR on any of these, you would have taken 6 or 7 trades which have made you profit before that one got filled. It bounced out of it because they sold it from there. The accumulation break happened there. That is the point of selling. That's the point of origin of those sellers starting to go short on it. They're going to defend that with their life because they're short. This is likely to bounce because they're long. There are unfinished business to be conducted up here. So at some point, it's going to fill those gaps with a high probability. But it's all ifs and buts. Everything in this industry is ifs and buts. What is a guaranteed fact is 58% of the time, it won't move beyond its average daily range. That's why I target it, because I know I can be in and out fairly quick and easy. But again, this is why I say there's no hard, fast rule. It's personal preference. If you're the type of person that wants to get into something and target that, and you're happy to sit in there for 3 weeks to get that 7-to-1, 8-to-1, 9-to-1, if you're not that type of person, do what I do. I'm not that type of person. I tried over the years learning to trade. I've tried every time frame. I've tried scalping. I've tried swing trading. I've tried day trading. I've tried investing. I've tried everything. And I'm not good at holding trades. I get scared by candles. Bear candle comes in, I'm like, oh, I don't want to be in it anymore. I want to be out because I've got profit on the table. So I've developed a strategy that works for me. But if you're more of a holder and you don't like getting out with small profits, then you target propulsion gaps. Yeah. Propulsion gaps get filled. Look at them. Look at all this grey. Everything grey on here is a filled propulsion gap. If you had got in short here, right, we got in this prime example, got in short here, targeting this propulsion gap. It pushed up, take another short, target this propulsion gap. So move your target up to there. It carried on pushing, getting short again, target this propulsion gap. It kept on pushing, getting short again, target this propulsion gap. It kept on pushing, getting short again. Yeah, there's no real targets there. So keep this as your target. Did that trade work? Absolutely beautiful. But it took 3 weeks. I can't sit there for 3 weeks. I have to sometimes with position trading. That's just the way of the market. This one I was in for 1, 2, 3, 4, 5, 6, 7, 8, 9 days. 2 weeks. And out. But that's because I couldn't stomach it anymore. And I wanted out. Because it was squeezing. But these propulsion gaps, these old propulsion gaps, will at some point either get filled or orphaned. You just don't know which ones are going to get filled and which ones are going to get orphaned. The vast majority of them get filled. You just have to wait. And you can't time when to get in to go for them, because all they are is unfinished business that we know the market will be attracted towards, but we don't know when. Again, brings me back to the bootcamp, timing. You can't time the market because the market is random and not driven by something that works on timing. So all you have is the fact that it's going to go up and it's going to go down. You don't know how far it's going to go up or down, and you know it's going to happen at some point in the future. So what you target is entirely up to you. Just target something that's reachable. Yeah. So don't target that high if you're going long. Target this. That's 1 3/4 ADR. That's a decent move. If it pushes down against you, get in again down there and keep that target. If it pushes down and fills that propulsion gap, get in again and retarget a different propulsion gap that's closer, that's easy to reach. It's all about getting out of trades as quick as possible, because you can't time how long you're going to be in it. You can't time whether or not now is the time to get in. You just need to get out as soon as possible. So you always need to pick a target that's reachable by the market, wherever the market is. When I got into this trade, that was reachable. By the time I was 4 trades in, that was hard to reach. So you adjust, you keep your average price within its average daily range, as much or as close as possible to it. Yeah. In there, target was there. Did it work? No. Get in again. Target the top of the propulsion gap. Did it work? No. Get in again. Now the target is here for me. There is my average. That is the propulsion gap that gets me out. Pushing further, you can move your target up to there. If you're taking another position up there, your average would have jumped and you could probably get out there. Yeah. But if it bounces out of here now, we know at some point these propulsion gaps will get filled. Yeah. Bounce, 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 because they accumulated and broke long. Therefore, they add. And then finally the sellers go, oh, all right, we give up. And off it goes. That is still a valid target. Yeah. But it's putting in more targets as you go. So you're just using the propulsion to find out where price is likely to be attracted to. It's a magnet zone. But if you want to be in and out of your trades as fast as possible, keep your target within its average daily range if you can. And if you can't, you can't. Like this one, Pound New Zealand is a great example. My average is 150 ADR. I can't keep it within an ADR. It's moving too fast. I'd love it to be here. It's not. Nothing I can do about it. But am I confident this is coming down? Yes, because there's a propulsion gap, and a whacking great big gap there. There's a propulsion gap there. It's coming down at some point. Is it going to go up for another 3 days? I don't know. If it does, what am I going to do? Adjust my position up so that I'm within reach of a target. And if I make a loss of 2% on this entire move over 2 weeks, oh well, I've lost 2% of my account. But I haven't tried to time the market to get me in, and that's the difference. I'm not trying to time the market. I think it's going to do something. If it doesn't do something, fine. I'll wait for it to do something in the future. It will do something in the future. It will pull back. It has to. We just don't know when. And all you're going to do is you're going to scale out the position. So it's just a case of waiting and targeting what you want. But, you know, it's all best laid plans, isn't it? Every trade is a great trade when you enter it. Otherwise, you wouldn't enter it. Does it ever work out? Very rarely. Yeah. This is why everybody in trading has a strike rate somewhere between 30 to 60%, because the vast majority of the time you get it wrong because you can't predict or time a random event. So stop trying to predict or time the random events and adjust yourself to the market. What we're doing is we're saying, I think it's coming down here. If it doesn't come down here, I'll wait and see where it goes, and then I'll readjust for where I'm going to next. So you're always in with an idea of where you're going to go. You just need to change where it's going to go to suit your position. If you're a scalper and you're using a stop loss on it, yes, target that. But I mean, look at this pound New Zealand, right? As a scalper, no, sorry, not pound New Zealand, pound odd. Well, there's another example there. Look. So as a scalper, I see a nice propulsion gap and I see a 2-day rally, or rather the end of a 1, 2, 3-day rally. I get in and I go, right, I'm going to target that. You stop out. It pushes up again, huge push. You go, I'm going to get in. You stop out. You get in again, and that one works. But the trouble with using a stop is these two stop outs have lost you 2% of your account or whatever you're risking. This one, you have to let it run for a minimum of 3% profit. That's the thing that you can't do as a trader, which is why everybody fails. Because as soon as you see that flagging like that and that's starting to push up, that entry there, you go, panic, take it. I've made 0.75. So your net 1.25 loss. Because you can't hold trades. I can't hold trades. I've just admitted I can't hold trades and found another way to do it. Most people won't admit that they can't do it. And they keep doing it and they keep system hopping, looking for the system that gets them in perfectly, tries to time something untimable. It's not possible. There you go. That's why I use targets of half an ADR. A long-winded version of why I use targets of half an ADR. Can you share the market reversal EA config details? Yeah, all on the blog post link from the product page. If you go to the EA page, there's a manual and there's some set files there. Oh, it's annoying. Look at it. That was the long flip. Yeah. Loads of money. DAX worked nicely today, though, as you would expect it to, because it's a Frankfurt session. Trade the DAX in the morning. I set mine up, but it took profit too quick. If it's taking profit too quick, you've got the settings set up wrong. So read the manual. I sound like a broken record, but please, if you're going to buy the Market Reversal Alerts EA, read the manual. Everything you need to know about why it's doing what it's doing is in the manual. And you'll look at it and go, ah. So the reason yours is getting out too quick is because you are using close all in profit and you haven't adjusted that figure for your account. So this is set up in the set files, I think, to £25, $25, whatever. Yeah, because it was based off of a 10K account targeting a 0.25% profit. If you are trading a 100K account with it and it's set to $25, you're going to get in and it's going to get out virtually immediately, isn't it? That figure is probably wrong. It's all explained in the manual. I can't stress it enough. This is a massively complex EA for a good reason, because it's highly configurable. But with great power comes great responsibility, and your responsibility is to spend 10 minutes reading the manual, which I took 6 years to put together. But that's probably what it is now. You heard the scruffy trader? No, haven't heard of the scruffy trader. Are you trying to say I'm a scruffy trader, Les? Yeah, big Les. I have had a shave yesterday. I didn't bother today. I haven't heard of the scruffy trader, no. Is he on YouTube? Always interested in you boys. Oh, there we go. Scruffy trader. 7,000 subscribers. Oh, look, he looks just like me. Slightly overweight English bloke. I don't know if he's English or not. Don't know. Oh, he uses moving averages. High win rate strategy. Don't know. Never heard of him. Go and check him out if you're interested. I'm too old and long in the tooth to be following new people. Unless I see somebody making profit, then yeah, I'm interested. Pound CAD. I think we covered that already. It's an ADR hit, wasn't it, today? No, it wasn't. Did we not cover the pound CAD? No, we didn't. Pound CAD. So it's a resistance bounce yesterday from that old 2/3 week level. Propulsion. Oh, yes. Yeah, we looked at it. We were looking at it, weren't we, while I was talking then, because that was the entry that I got into yesterday. That was the entry off the reversal alert and in out quick. ADR reversal. Ping. Quick exit. DAX heading for yesterday's low. Yeah. So that's obviously first target where you would expect to see some limits trigger. So everybody that's in the reason we have limit orders at highs and lows is because the investment style traders that are trading long time frames basically are using the highs and lows of previous days to enter their orders. So it's a very, very well tried and tested strategy, buying and selling the highs and the lows of the day. So it's very similar to kind of the opening range breakout. It's the type of strategy that will net you a long-term gain, but it's reliant on a trend day. So when you buy or sell the highs or the lows of the day, you're assuming that the market will bounce from that level. And what you do is you just exit it by the end of the day with whatever profit you've got. And you set a risk as a stop, basically, at some point. So that's why we get reactions at support resistance. And usually those support resistance are highs and lows of the day. It's never to the pip, obviously, it's an area. But yeah, that's where you would expect to find that pullback. So at the moment, all we're doing is we're just, I would imagine, flagging to test that area. Once that area is tested, there will either be more buyers in the market today than there are limit orders at that level, and we will drive through it. If we drive through it up into the gap fill, we will find people playing the gap fill short at ADR, and that's where we'll test it again. This is why you'll hear me and everybody else out there saying test. That is what it is. It's a test. It's a test to see if there is resistance there, i.e. if there are sellers there. If you're buying something, right, and you've got a move going, you are going to test an area to see if you can push through and make more money. That's why it's a test. We're testing to see if there's potential profit up there. No, there isn't. Okay, we'll get out. That's literally why people call it a test. You're testing support and resistance. You're testing to see if there's limit orders there of a strong enough volume to stop your profitable move you've got going, i.e. HSBC, Barclays. Have Barclays got more at the moment than HSBC? And this is why a lot of the times you will find they work, because HSBC have been buying the crap out of this. If they've got 25 million to make a move today, and by the time they get there, they've exhausted 18 million of it, they've got 7 million left to test that level. If there's 25 million sitting short at Barclays, they're going to run out of money before Barclays do. And that's what happens. That's why the market moves. That's why market structure is there. That's why the market exists, because you will keep buying until you can buy no more. When you stop buying, you take profit. You take profit when you find an area that you can't buy at anymore, because there's not enough people wanting to buy with you, or there's more people wanting to sell there. And then you get out. You make that. You make whenever you get out is what you make. You become part of the movement in the opposite direction, which is why we have these lines on the chart, because they tell you where you're likely to find And that's why I use support and resistance trading on my prop accounts. Hourly support resistances are fantastic, and 4-hourly even better. Weeklies, basically, it's your weekly support resistance. Always a good level. That overshoot there. That was a gap fill, but you know, there's always a level with more orders than someone else. You just don't. Again, same as I always say. You don't know which one. It's going to be that. If it's not that, it's going to be that. If it's not that, it's the next one. You can't time which one it's going to be. If you could, you would be 100% strike rate, wouldn't you? No one is. It don't work that way. Is there a way to easily draw in half an ADR on manual trading? Draw it in. Not really. I mean, why would you need to draw it in? If you're saying you're using half an ADR as a target, just do it, right? So this buy here, half an ADR is 38. Yeah, it's 76 divided by 2, in case you didn't know. So if you've got the ADR indicator, it draws in the top left. Yeah, it draws up. You can't see it; it's too small. But it draws up here what the ADR is. So get that number divided by 2. 76 divided by 2 is 38. Yeah, so all you do is you get your order and you drag it up until it says 380. Half an ADR. Ta-da! Don't need to draw it because it draws a line automatically for you when you put your TP in the market. If that's what you mean, otherwise maybe I've misunderstood. Can't beat Mamba FX. He's a good one. DW film. Is there something like the 2 currency rule for the H1 hedging set file to limit exposure, or is it meant to be put on all 28 pairs? No, there's no way to limit exposure automatically with the EA. That's your job as a trader. So you have it's really simple, limiting your exposure. There's 2 ways to do it. Well, there's 3 ways to do it. The way that I do it is I wait for I don't have the EA running on every single one of my every single pair on my account. I do, but it's turned off, right? So what I do on my VPS is I watch what's going on in the market. So I'm looking at pound New Zealand right now. Let's say I've been on holiday for a week. I've come back and I've gone pound New Zealand. Wow, that's really extended on the 4 hour. That looks like a good short. What I'll do is I'll go over to the VPS. I'll find pound New Zealand. Yeah. I'll open it up and I'll set it to allow live trading because that will be turned off. So I just go and I'm done. And then in the inputs, what I do is I say to it, go short. That's it. It literally just goes short for me. Now I'm in pound New Zealand short. And I will then watch my exposure on the pound and the New Zealand. So that's how I use it. If you want to put it on all 28 pairs, you can do. You just got to keep an eye on your dash. And this is why I developed the Trade Manager dashboard so that you know what you're in. Yeah. At a glance, you can see what your exposure is. At a glance, you can see what the lots you've got on. You can see everything that you're trading, the directions you're trading. It tells you everything you need to know about managing your portfolio. So if I've got £3 on short and I've got 3 New Zealands on long, I know I'm overexposed on the pound and the New Zealand. If I've got 2 on, I can't take any more New Zealand. I can't take any more pound. If you want to trade everything, you can do. You can put the EA onto every single pair. Just reduce the risk. So the set files that I pushed out there are all trading 0.25% risk per trade over half an ADR. So that is what I kind of use as my 2-pair rule. So if you wanted to put it on every pair, there's an opportunity for the EA in effect to get you into 7 trades in one direction. Yeah. So if you reduce that by a factor of 3, yeah, because that is ideally set up, in my opinion, for taking 2 entries. If you want to take 6 entries, let's call it 6. It's 7, but call it 6. 1, 2, 3, 4, 5. That was 6. Reduce that by 3. So what you can do is one of two things. You can either drop that down to maybe 0.7, or you could make that 1.5 ADR. So your stop is calculated over 3 times the distance. That will reduce your lot size by 3. And you can trade every pair under the sun. Like these are all set up to trade every single pair, just so that we can see every single trade taken by the EA. Yeah, on all of the strategies. So you can do that. But it's up to you to manage your account. The EA is a tool to get you in and out of trades. Whether you place the EA on and say, go short for me now when you see an opportunity, whether you just put it on 10 pairs and limit your exposure that way, that's fine. Or put it on all pairs and reduce the risk by 2/3. Has the same effect, doesn't it? ADR 125 on Euro US dollar. Big moves. Looks like US dollar strength again. Yeah, so more US dollar strength coming through. Holding up against the yen, look. Good moves. Has there been yen strength? There has. Have you used ChatGPT to help you code on MT4? No, I don't need to. Could do. I have done. That's a lie, really. I have done. I've asked it questions, but only because I can't be bothered to look up the results. Everything you do when you're a programmer, right, is there is no programmer out. Well, true either, but most programmers don't know everything about programming languages. You know what you need to know. So if I need to build something to do something, what I do is I concentrate on finding out how to do that thing. I don't need to learn every single line of code and every single command, every single way of doing something, because you just build what you want to build. So if I go, not sure how to do that, I'll ask ChatGPT how to do that and then incorporate that into the code. So AI, I don't think you can use AI to build anything from scratch, really. But if it doesn't work, who are you going to ask? If the AI that built the EA for you has built it wrong, who do you ask? The AI boss? There isn't one, is there? So you can help. It's very helpful. Basically, the way I see AI being used in most forms of life is a replacement for Google. Yeah. So when you Google, why doesn't this code work? MT4, you get a load of results up. Yeah. MQL5, XNES, Forex, EA Coder, Stack Overflow, Forex Factory. There's loads of results. So basically my job now is to go through each of these and look for the answer to my question. What ChatGPT has done has replaced you clicking through this lot. It's done all this. So you ask it the question and it just comes up with the answer. So it's a replacement for Google, basically. It's a search engine replacement. It just goes and gives you the exact answer. Rather than you typing a query and then having to look through the results to find the answer to your query, ChatGPT answers the query and actually does the work for you. That's the way I see it being useful. As coders, what we do is we go out and we find solutions to problems. If we've got something that needs to be fixed, we go and Google it. That's what I do. So if something breaks and I don't know why, I Google it, because 99% of the time, someone else has had that problem and they've gone, why doesn't this work? Someone solved it for them. So I find the thread where that problem was solved. Now ChatGPT means I don't have to do that. But if you try and get it to build you something from scratch, you'll find it very difficult, because you have to know the logic to ask it. It's very much a blunt instrument. Build me an EA to take trades short at RSI extensions above 70. It will do exactly that. What you need to ask it is to give you an input for lot sizing, a stop loss entry, a TP entry. You need to designate whether you want trailing stops in there. You need to be a lot more specific. That has to be taught by you. So I think it's got a lot of potential for helping, but I don't think it's ever going to be a replacement for coding an algo out of scratch. And everything that you build then has to be back tested. And you've got to back test it. You can't ask it to go off and back test it for you, because if you're going to do that, you need to ask it what data to use. You need to tell it what time frame your broker's charts are in. You need to tell it if there's time shifts for clocks changing. There's 1,000 variables in there. There's no shortcuts in trading. There's no shortcuts in anything to do with this job. Just realized I'm not on the screen again. I'm back. So yeah, I think it's helpful, but not not going to replace us, is it? Might kill us off, but. Morning, Tony. Yourself and the scruffy trader are similar, as you both do straight talking. All right, good. He scales into trades and doesn't try to get the perfect entry. Cool. Probably one of my students. I guess. I don't know. Not looked at him. Spreading the word about position trading is good. Two currency rule also applies to H1 hedging. Two currency rule applies to trading, in my opinion. If you get into 2 trades in one direction, you are double exposed on that currency. If you get into 4 trades in one direction on one currency, you are quad exposed to that currency's movement, aren't you? So there is no, if you're going to get in to more than one exposure, on one currency, then yeah. What happened there? Yeah, look at the New Zealand dollar. This is the VPS account that is taking every trade on every single currency. Not because don't do this with full risk. You'll be in trouble. This is trading everything to show you every trade, right? If you've got exposure like this, yeah. If for example now the New Zealand dollar tanks for the next 3 weeks by 5 ADR, right? This account will be blown. This will be gone. No more. Yeah. I'm 100% expecting at some point every single one of the accounts on this VPS to blow. Because at some point it's going to get overexposed in a squeeze and it's going to get blown. That's just what's going to happen. If you do that, it will... Any strategy, yeah? It doesn't matter what strategy you're using, you'll blow your account if you overexpose yourself. Which is why the rule is there. Johannes, ChatGPT is Google 2.0. Yeah, it is. It's amazing. It's kind of a cross between Alexa and Google, isn't it, really? But a more intelligent one that gives you a much more defined answer. But like they were saying on the news the other day, I was watching something on the news about, and obviously it's on the news at the moment, about all the guys that have built all the AIs saying you need to regulate us because we're about to blow up the world and kill the human race if we don't get regulated, which is a possibility, obviously, I suppose. But what they're all saying is, if you actually read what it puts out, it's actually quite crap, some of it. So you ask it to write an essay or write a 2,000-word document on a specific subject, it will use a lot of paragraphs which are kind of repeaty. So although it is very clever in finding out information, it's also not by any means perfect. But we are 2 years behind. What we're seeing online right now with Google and ChatGPT and everything is 2 years behind what they've got. What they've got is way more sophisticated. They're just not releasing it yet. Because obviously there's this taking over the world and killing the human race thing that they've got to sort out first. A bit skeptical about, but anyway. Shroud, I'm taking entries from higher time frame propulsion gaps, weekly, daily, 4-hourly, and reverse alert on the hourly, 30-minute, 15-minute, with calculated risk. Results are quite impressive. They will be. If you're using a stop loss with that type of strategy, it's going to work fairly well. But it's, I've built EAs to test propulsion gap theory, and it's the same as anything. It works sometimes and sometimes it doesn't. Yeah, sometimes it bounces at them, sometimes it flies straight through them. You know, everything is a everything you use in trading is a might be. And there's two ways of trading: using a stop loss and accepting all those losses, or not using a stop loss and adjusting your target and adjusting your entry. Those are the two ways to trade. The first suits some people, the latter suits most people, which is what I do, because it's easier to adjust your entry and adjust your target than it is to get stopped out and have a bad week which loses 10% of your account that you now have to recover from. We're not psychologically set up to take those types of losses. Just testing the high of the day and approaching last week's high on the DAX. Nope, last week's high. Yesterday's low, sorry. It's not last week's high. So we might be finding a sticking point here. Again, limit orders are going to trigger here. So we've pushed. Yeah, market's pulled back. That's a profit take. Sellers have started to jump on board. Everybody that started to sell from that level is going to want to keep it short. Therefore, they're adding to their orders, which is why it's it's hard to get through, because there's guys selling here. So all the buyers wanting to continue their move are meeting guys that have just started selling. Who's got the bigger pockets? No one knows. We'll find out. It's either going to do that, and these guys have got the bigger pockets, or the guys that have just started that move have got the bigger pockets. And this is what people don't get. Or there must be an indicator that can tell you that. Oh, he's trying to predict the future. It's physically impossible to do. As soon as you stop trying, you start making money. So you're using the reversal EA shroud. Just basically putting it on and saying, right, we're in a propulsion gap, go short or long. That's good. Pretty much what I do with the EA on my Forex funds, except I don't use propulsion gaps, I use support resistance. So rather than RSI, I will get in. As soon as we get to that level, I will stick the EA on and say, short it for me with half an ADR. And I don't set TPs, I get out when I like, which is always 1.5 hour plus. But that's a great strategy as well, propulsions. Because we know they're going to, we know a lot of them are going to trigger, aren't they? So more than one way to skin a cat, as they say. Well, I'm not sure who came up with that, or why you want to skin a cat, but or cat. Right, so watch this level for shorts. I'm going to I might try and manually trade this afternoon. I'm going to let the EA run again, the new version of the EA. I'm going to let this run again this afternoon. I'm going to double, triple, quadruple check all the code again, and see if I can figure out why it didn't go long, or even attempt to go long there. Or if there's a way that I can force it over and over and over and over and over again to say, please long me, until it doesn't, which is what I thought it's doing, but it's not. So I'll have a look at the code again this morning and see if I can figure it out. But this is my last attempt on this. If it doesn't work, the next version, I'm just going to scrap it and trade it manually, which I can trade in here with the Price Action Toolkit. So the opening range breakout EA will trade this as well. It just won't trade it as effectively or as efficiently as I think it needs to be done, which is getting in and out faster. So the other option also is to test this, which I haven't done yet, on the 1 minute charts, which you can do with the Price Action Toolkit already, not with the opening range breakout EA already on 1 minute. Because on the 1 minute chart, what I could do is place pending orders. When we get stopped out, whichever candle we get stopped out on, place pending orders above and below that candle that stopped us out. Because the pending triggers I know work fine. It's the get in immediately, which we're not seeming to get the orders filled for some reason on. So pending orders, because they're further away as a distance, maybe that's a way. So I might look at that as an option actually as well. I need to do some, again, The trouble I've got is obviously live testing. You can only back test, and then you know back testing works fine. It's just the forward testing. It's not working in here for some reason. It's just not triggering those orders, is it? So we'll figure it out. But I might try and manually trade it. I might try and manually trade the Dow and the NASDAQ this afternoon with the Price Action Toolkit, and then go from there. Really. Right. Anything you need, I'll be in the Telegram group. Everything that is in at the moment. It's doing some drawdown control again today because we've got quite a few bits which are squeezing a little bit. Nothing's really squeezing massively hard. It's just not undoing itself, is it, at the minute? So just monitoring everything there. Be aware of news today. We've got the German CPI figures at some point. I'm not quite sure why that is an all-day event, why they haven't given a time on that. German CPI, they reckon 1 o'clock on Financial Juice. So yeah, watch that this afternoon around the end of the current month. Actual is comprised of data from 6 German states. Oh, right, okay. Right, so we're going to get the amalgamation of all of them today, right? Okay. So, yeah, that's coming out today. So watch that. We've got the GDP for the Canadian dollar this afternoon as well. And then we've got Jolts after market open. So may or may not have a pause for that at the open. We'll see. Jolts doesn't tend to do an awful lot. So we'll see. But yeah, watch out for that today. So we could get a decent move off of the euro at any point today, probably this afternoon. And the Canadian dollar, we are going to get a move off of later as well. So I'll be back for 2:20 for the New York session. Ron, first visit, very impressed with your down-to-earth and understandable approach. That's good. Thanks, Ron. Could you tell me what EA is on your chart? Or is there more than one EA? So go and have a look. There's links going along the bottom, Ron, of the website to of the stream to the website. So on the website, you've got an expert advisors section, which gives you the 3 EAs that I use. So the market reverse alerts is for position trading. You can use it for stop loss trading as well, but I use it for position trading. Opening range breakout is a index momentum strategy, breakout strategy, which is at market open. Price Action Toolkit is a manual trading scalping tool. There's the position trading bootcamp teaches you how I trade, which is position trading. And there's loads of other education on there as well. So just go and check out the website. There's loads of information on there. And all the indicators that I've built and sell on the marketplace, if you want them, they're all on there. Been backtesting the first 4-hour candle breakout with some nice results. I'm considering setting the ORB on it. What's that on? FX or on... Oh, on EU you've done it today. Right, okay. There's a few people who have said that they've tested the opening range breakout EA on FX pairs and have had fairly good results with it. I haven't done any testing on it because I don't trade any breakout strategies on FX, just because I gave up with breakout strategies. Like the London breakout strategy that everybody goes mental about doesn't work. Everybody that kind of shows videos on it says you can do this or this or this or this. Well, yeah, you can do anything, but no one can pin down an exact strategy that works on the London breakout. So I didn't pursue it any further. We're just stalling up at the highs on the DAX. Not quite got there, but that gap fill certainly in play today. There's the 5-to-1. Look, 1.5 and the 5 are long. Tick. So we got the 1.5 short on the DAX, but if you'd have flipped long, that would have been nice. US indices look like they want to rally as well. So I think we are going to get that gap fill on the DAX. But yeah, that's good. Be good to know your results on that, Brian. If you're using the ORB, because I can do a video on Forex. If you've got a decent strategy that you think works, we can backtest it. But what is the first 4-hour candle as well? First 4-hour candle of the London session, first 4-hour candle of the New York session, first 4-hour candle of the Asian session. Lots of different ways. And everybody's 4-hour candles are different as well. So some brokers are GMT +2, some brokers are GMT. So some candles close at 2, some 4-hour candles close at 2 a.m., some 4-hour candles close at 4 a.m. because some brokers swap at 10 p.m., some brokers swap at midnight. So again, your broker on the first 4 hours of the day might be different to someone else's. Times. Again, this is the whole thing about timing, isn't it? The only thing we can time properly is the ring of the New York bell and the Frankfurt bell. Other than that, the Forex markets are 24/5. And how you plot that on a chart is entirely down to you. Just broken the highs on the US indices. So the DAX will probably pop in a minute. But yeah, be interested to know the results on that. Let me know how you go on. Right, I'll leave it there. Anything you need, let me know. I'll be back tomorrow morning, 7:50, same time, and 2:20 this afternoon for the New York session. And we will buck about with the opens, see if we can make some money. But yeah, I'll be in Telegram if you need me for anything else. Other than that, have a good day, and I will see you next time.